What's going on, everyone? As you may know, I got a new mic, so I might be sounding a little different today on this third. Is this our second or third podcast of the year?
This is number three.
This is number three. And we have Don, co-host of Define Productions, here to bring his thought process. He's got a really good, he's really good at articulating certain matters. Which I mean, if you guys been watching our last couple episodes, you might agree. Um, but yeah, today we're going to be diving right into the crypto total market cap. We're going to waste no time as this is a crypto podcast. First and foremost, we're looking at the weekly chart. So for those who don't know what I'm looking at, it's just a different time frame. So I'm looking at the total market cap of all the cryptocurrencies on a weekly chart, and we're still in this range. And we've been in this range since last year in May, it seems like,
Yeah. Yep.
we're holding this top from over in 2018. We haven't broke below it. There could be potential news events that can bring us, like, for example, we want to talk a little bit about the Silvergate Coinbase situation. Silvergate is actually is down 43%. Let's take a look at so didn't George Soros, I heard George Soros had a huge short position, on this, and that makes sense. They what do they run the world?
Yeah.
You can see this is the weekly chart for the Silvergate Corporation, down 43%, or yeah, 48% right now. That's terrible. And then we also want to dive into Gary Gensler claiming crypto as securities. I think these are two important topics for the week we should discuss.
Yep.
But as usual, we're going to be diving real quickly into the market cap, which is trading at, what is this? 1.02 trillion. So we are hovering that 2 trillion market cap for now, which is great. But yeah, what are your thoughts on that?
Yeah. It seems like we've been holding that $1 trillion market cap for quite a while now, and it's like you pointed out, we've been in this range. We've been range bound, and it seems weird because there's been a lot of volatility. Dropping down to 15, going up to almost 25. That's a $10,000 difference. But I mean, when you zoom out, like we tell you to do all the time, like it doesn't seem as bad when you
Yeah.
look at it from a zoomed out perspective.
If you zoom
when you're
out,
living when you're living it, it feels different. But like when you zoom out, it's not really that bad.
when you zoom out, this is just a very large higher low. Like,
Yeah.
let's see, let's pull this up right here. So now we're looking at it in the monthly chart. And this is, yes, if you bought crypto in the last year, you might be hurting a little bit. But for the pioneers, Don and I, I've been in this since 2018. He's been in this since 2013. This is just a higher low on the larger time frame. This is nothing to sweat about. We each candle represents a month now, and you can see the last 2 months just been, up only, which I don't know for sure if this is going to stay like this. Again, that's why I want to dive into the first set of news today. And I'm going to just read the headline. Coinbase jumps ship from Silvergate, moves customer funds to Signature. So basically, Coinbase is no longer using Silvergate to facilitate dollar payments for its customers. And now they're using Signature Bank for payments because they're concerned over the solvency of Silvergate Bank, which, as you can see, I just showed you the charts, down 48% and at an all-time low. What is your thoughts on
Well,
on this movement?
this is like really really bad for Silvergate because Silvergate is basically a crypto focused bank. Like most of their banking business is crypto based, and for Coinbase, as big of a organization in crypto as Coinbase is, for them to abandon them is it's hard to see a path forward for them after this. I mean, I don't know where they go from that. They're losing their biggest customer, so
Yeah,
not very good news for Silvergate. If there were
this
solvency problems before this is only going to compound them.
hmm absolutely. This is not so. So when I say buy the dip, we're not buying the dip on Silvergate.
No.
We're gonna stay away from these. Um, we're not gonna be buying the dip. That's so yeah, George Soros. Let's see if we could find the article. George Soros shorts Silvergate. Let's see if we can find this. If you guys can see, I'm sharing my screen. Yeah, George Soros family office bets against crypto bank Silvergate. Do they know something? They speak at the World Economic Forum. They're very powerful people. They know something, right?
Well, I
They're
mean, I'm sure that they're
not
privy to a
crypto
lot of
friendly.
stuff
Well,
that
they're
we.
also probably not crypto friendly because they run the banking systems, you know.
Yeah, I mean, at the end of the day, they're in the business of making money wherever that position
Right.
lies. So I mean, they probably saw the writing on the wall, and they have the capital to deploy to make a big short bet like that, and that only, like, again, that only compounds Silvergate's problems.
Yeah. Another big headline, which was 3 days ago, crypto lawyers flame Gary Gensler over claims that all cryptos are securities. So all altcoins are securities. They talked about how if there is a team behind it, there's a team, there's a community expecting profits. Um, he's claiming and putting this in the securities category. Um, let's see if we could find some good stuff in here.
So while you're looking for that, I'll talk about. I have a little bit of a unique perspective on Gary Gensler because I've been in this space long enough where when he first was given the job of the chair of the SEC, uh, the crypto community was kind of like, we were kind of excited about it. I guess you could say, like, we thought this was going to be a good appointment because he had a past as a adjunct professor or whatever you call the a professor at MIT teaching a course on blockchain, and he had quite a bit of knowledge for the time on Bitcoin, and he spoke pretty good and pretty eloquently at the time in regards to like blockchain and Bitcoin. And we were like, okay, we got this guy coming in that understands blockchain, understands Bitcoin. Whenever we do get some sort of regulation down the line, and this guy's making those decisions, it should be pretty good for us in the space. And obviously, as he has, the years have passed, and
Agent of the
got his
Matrix.
he's got his feet entrenched in government and in politics. I know it's not a political appointment, but I mean, like, he's gotten worse and worse in regards to the things he says about the space. He does still say that Bitcoin is not a security, which we all believe it not to be. The thing that gets everybody else riled up is that he hasn't been very clear on everything else. And again, the Bitcoin maxis will be happy that he says that Bitcoin, is not a security and everything else is a shit coin or whatever the case may be. But he he's been in this position for a while now. The last guy that left it, Jay Clayton, he was an absolute piece of shit. He is a piece of shit. I feel comfortable saying that because he is the creator of the bit license in New York State, which is, for us, we're New York State residents. It makes engaging in crypto much harder than any other state. And he left the position at the SEC to take a position at a crypto company. So he made things really, really hard for us here in New York, being the anti-crypto guy, only to take a high-paying job in a crypto company. And all of a sudden was a pro-crypto guy after he left all the carnage and damage at his position where he had some authority. So these guys get, they may start out with good intentions, and then they get into these positions of power, and they get corrupted and polluted, and you don't know, like, where they're going to take things. And Gensler's showing that, with the whole FTX stuff, like that's something that was in his power to help to avoid. Like, if we had clear regulations, some of the things that FTX and Celsius and 3AC did might not have been able to be so easy to occur. And again, it's good that we have these like, I'm a capitalist. I want there to be, a free market where people can deploy their capital where they please, but there also should be some guardrails in place so people don't get rug pulled like they did with these big organizations and lose capital that they thought was safe. You know what I mean?
So, are you saying, do you believe in 100% decentralized world or a 95 decentralized world, 5% centralized? because that's much better than the 95% centralized world we are. You know what I mean? So you have to, you're not going to get, if we don't get the whole shebang, let's get some of it. Let's not, if, right here, I finally found it. It says, other than everything other than Bitcoin, you can find a website. You can find a group of entrepreneurs. They might set up their legal entities in a tax haven offshore. They might have a foundation. They might lower it up to try to arbitrage and make it hard jurisdictionally, and so forth. Cryptocurrencies, basically, but at the most basic level, they are trying to promote their tokens and entice investors, which investors are anticipating a profit. But at the core, he's arguing, Gary Gensler, that tokens are securities because there's a group in the middle and the public is anticipating profits based on that group. And he's saying, so if you look at this, I thought this was interesting. Right here, it shows the total market cap for crypto, 1.13 trillion at the time of writing. Right. Bitcoin is 40% of that, 467 billion. And according to Gary Gensler, that means 663 billion in value are illegal in the U.S. because they trade publicly as unregistered securities. That means 12,305 tokens. So far, the SEC has handled tokens in mainly two ways. Number one, a fine plus registration requirement. This failed every time so far with the companies becoming bankrupt. And number two, fine plus order to destroy all pre-mined tokens and delist tokens from all exchanges. Both ways, tokens go to zero. This can make sense on why, we have some uncertainty right now, especially, with on the weekly chart. Well, we're a little, the last 2 weeks, we're down a little bit. Not much, but you can see that we don't have that optimism as we do.
So I want to answer your question that you posed, because I'm a little divided on it. So maybe speaking through this can help me walk through my thoughts. Mm-hmm. I believe that a decentralized financial system is absolutely essential and necessary. Okay. However, in 2023, where we're at now,
make it good. This is your short form click.
where we are at now, it's necessary and essential, especially to gain adoption the way that we need to gain adoption, for there to be centralized players to allow the lower fundamental understanding of crypto entry into the space, because the understanding level needed to engage it can be rather high. You know what I'm saying? To the not your keys, not your coins that we like to say, is great, and we both thoroughly believe in that. But it doesn't really hold a lot of value to the guy that's just learning about crypto right now, right? Like the guy that's looking to make their first purchase or make their first investment per se. Not your keys, not your coins is something that's a conversation that we have down the road. We have to on-ramp you, right? So on-ramping you is going to be a centralized player. So for guys like us that are advanced, right? I want decentralization. I don't want any centralized players in my life. You know what I'm saying? I might make my buy on a centralized location and then pull it off, right? I need them for a small period of time. And I want there to be some semblance of trust that I have with them, that when I buy it, I'm going to get it when I pull it off. But for the average investor or the average person coming into the space, they're going to rely heavily on these centralized players. So we need these centralized players to be trustworthy, right? Like Gemini and Coinbase and some of these other exchanges, they have to be above board. Like if they're not, and then we lose these on-ramps for people, like how do we get new people in the space? How does the market cap ever grow? Because I really believe that, for this to really truly take off the way that we think it's going to, getting those 100,000, 250,000, $1 million Bitcoin prices, we have to on-ramp a much higher degree of the population than we have now. In order for that to happen, we're going to need these centralized players to be playing fair. And it's tough because, for me, getting in this in 2013, like I come from the libertarian thought process where I don't want the government involved. I don't want the third parties involved. I want to be my own bank. I was sold on that. I like that. And I want to be able to hold my tokens and nobody else can have them. And, one of the only assets that you can truly own, all that stuff that I've talked about before. But the barrier of entry is needed we have to go through these centralized players. So we need good actors in the positions that are making decisions to make sure that the average consumer can be protected, because we don't want another Mt. Gox. We don't want another Three Arrows Capital and Celsius. We don't want another FTX. We don't want these guys, these novices and these beginners to get burned and then to never come back in the space.
And that's what you're seeing, especially for the first cyclers, like they're traumatized. Imagine, putting your money in, not 3 euros, the Terra Luna situation, thinking you're getting a 20% yield on your UST. For those who don't know, there was this yield farm or this staking opportunity where you can take your stable coins, earn a 20% APY, and people are going nuts over it. But it was basically a Ponzi. It was basically another scam in the industry that hurt a lot of, families and hurt a lot of average people. A lot of people lost a lot of money. And then, they're like, screw decentralized finance. I'm putting it into a centralized exchange. And then for something that they wanted to trust, you would think you would trust a centralized player, right? Especially FTX that has its, logo all over it, every commercial, Super Bowl, and on stadiums and stuff. The fact that, you put your money in there and you lose it in that, and you thought you could trust, that's something's got to change.
Yeah.
So for the centralized players that we do have, there should be regulation. There should be regulation around where there can be. And as far as decentralization, in the DeFi worlds, if there doesn't need to be decentralization, there shouldn't need to be it. But as far as the centralized players like Coinbase, the Krakens, the Q coins, the other centralized exchanges, yes, there should be regulation, because there should be that form of trust and certainty that we know that if you want to pull your assets off, they're safe. And this will help for new users. This is good for on-ramping new adopters. And I feel like for the bull market to really start, I feel like people need to kind of forget about what happened in 2022. So experts think this was going to be an extended crypto winter. Hopefully the 4-year halving proves us wrong. But in the meantime, the 2023, I think there's going to be a lot of sideways price action. It's going to be choppy. We're getting closer to regulations. We're getting closer to, what else?
According to the halving cycle in the 4-year cycles that we've had in the small sample size that we have, we're still on track. So until we're proven otherwise, until we hit 2024 and we hit the halving and we don't see what's happened in the past, I tend to fall on the side that things will continue to do what they've done every single cycle based on the way that Bitcoin was created, being deflationary. I think that, with the miners needing to, have a certain profit level to continue to mine. And then if they don't mine, the hash, it's all built into that model. Like,
it's crazy,
that's what, it's not just like, they threw something in a dartboard and it's stuck. Yeah. It's built, like it's built into Bitcoin. Like,
it's built. The
miners who hold the system together are incentivized to continue to mine at certain hash rates and profitability levels. So the price kind of has to fit within that as well. And then that brings the supply and demand. A lot of things at play.
I was looking at a video, Don, that we posted as a short form reel, and it was basically Bitcoin was at like 16,500, and you're like, I don't know if the bottom's in, but we're pretty close. Let me just pull this up real quick.
Okay.
Let me pull it up real quick. I thought this was really freaking funny. I was looking at this today. So this is our Instagram, guys. We'll put the links in the show notes. You can go over. This is the main Instagram. We also have another, the productions one. This one, let's go down. Did you stick around? Right here. I think it's this one. Oh, no, this was, where is it?
I don't hear any sound. I don't hear sound on my end.
You don't hear any fine. Basically, Bitcoin was at 16,500. Like, if the bottom's not in. It's pretty close because of the Bitcoin coming off of centralized exchanges into cold
Yeah,
storage.
yeah,
I think that was a good. So another predictor, another thing that can help you time the bottom, which not really time the bottom, but give you an idea that when the miners are going bankrupt, that's made me think of it. We've seen a lot of miners, mining farms go bankrupt because they can't maintain operations if Bitcoin's tanking and they need to sell their Bitcoin and they can't afford to maintain operations. That's another bottom signal that we use on top of a bunch of other indicators. I thought that just made me think of that. So I just want to bring that up.
yeah, yeah. I mean that's a good point. Like that's why I'm pretty confident that we don't really. I mean, I don't know if we wick back down at some point close to that. I mean, again, I think it would take a really extreme event for that to occur.
Mm-hmm.
But there's just so much that's occurred from the last bull run of Bitcoins in circulation. And then we find out that some of the Bitcoin in circulation, i.e. FTX, didn't even really exist.
Mm-hmm.
So you had a floating supply that was much bigger than the actual floating supply. So the amount needed to move the markets just isn't even there. It's not, I mean, that's why we're seeing this like we're in this like 23-1 to like 24-8. Like we've been bouncing back and forth for like a couple weeks just in that level.
I just want to do a little fun game, make it a little interesting for especially because I'm sure we have people viewing this that are like, all right, dude, what's going to happen with Bitcoin? Why am I here? I don't even understand. I don't know who Gary Gensler is. I don't know what Silvergate is. I don't know what mining is. I just want to know, is Bitcoin going up or down? Come on. And we're going to play a little game. Yeah, get to the meat. Is Bitcoin going up and down? Not financial advice. All right. Bitcoin's risky. Crypto's a newly speculative infancy, early sector. Is Bitcoin Troy, Don, is Bitcoin going up or down? Don, what do you think? In the next what time frame do you want to use for our viewers? Let's do next 2 months. Do you think so? It's March, April, May, June. What do you think is going to happen in the next 3 months?
Let's say the next halvening is right around April, May of 2024. That's what they're predicting.
So right
so
around
let's do like April 15th, tax day. Because that's right around a good like midpoint. So then 1 year from then it'll be the halvening where we should really be in the thick of the next bull cycle. So let's say there. So that's a month and a half from today.
Well, let's look real quick. Rainbow price chart indicator. I'm going to get a lot of hate. People are like, "Ooh, this is a logarithmic growth curve." It's just a visual representation. I don't use this solely for 100% conviction. It's just a visual confirmation, something I use on top of all the other indicators and theories and thought processes that go behind my trading. You can see every time after the halving, look at what happens. What happens? Boom, 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 right? But it doesn't go higher as the previous time. You know what I mean? Because this was a smaller market. Let's pull over to this one right here. So we're in this buy, basically a fire sale area, and the halving is on April like 16th, 25th, somewhere around there.
Yeah, it's right in the middle between April and May.
So about a year from today, you have a full year to accumulate and get ready for this. This is anticipated by many. I think we're going to even start ripping. We could have a super cycle. We can start ripping before the halving. But this is just a cool visual representation I thought you guys would like, especially for your early guys.
If you want to think back to the last halving in 2020, what happened, people forget. Like the halving occurred in May, right? In the middle of the pandemic, happened in May. And we actually bottomed 2 months before the halving because of the pandemic. We went down to, I think we did hit like 3,300 or somewhere around the 3,300.
Yeah, right here, right?
Yeah, that's right in the middle of the stock market, having those 3 days where they had to shut the levers off because it dropped like 7% 3 days in a row.
What was it? A limit? It was.
Yeah. And Bitcoin didn't have that, so Bitcoin went all the way down to like 3,300. And then look at that. Look at where it was.
Imagine buying that, dude. Imagine buying that.
I know. And look at where it was just a little while after that, or look where it was a year from that. Look at March 2021. Where are we at March 2021?
Like literally right here. So from 1 year, let's see the gain on that 1 year. Like over 1,000%.
Yeah, I mean, so this is Bitcoin, this is crypto, and I'm speaking from experience because I've been here for 4 cycles. So like you, this is why we preach how important it is. If you believe in something, either belief is this, and again, you can use religion too, and I don't want to get religious, but if you believe, you just believe. Like there is no ifs, ands, or buts. Do you believe yes, or do you believe no? So if you believe, you live your life in such a way where it mirrors that, right? So if you believe in an investment, then no matter what happens in the midterm to deter your faith, you continue to have faith in that thing because of your conviction. So think about it in those terms. So whatever, like if you come into this and you start to research and you do your research and understand the space, and you're like, yeah, man, I can see Bitcoin being this thing, and I'm going to deploy capital, and I'm going to stay in this space for the next 10 years. No matter what happens, no matter what storms come along, no matter what volatility that we see. And somebody that bought in the last bear market, let's say they bought it like 6,000, because there was a point where it was about 6,000 before it did that, and they said, you know what, I'm holding on to this thing for the next 10 years. That person saw their investment lose 50% in the middle of a pandemic when we didn't know what was going on. We thought the world was ending, but if that person had conviction and held, they got to see the top of 70,000.
So conviction and patience are the two characteristics that you really need to have a balance of, conviction, believing in it, in the innovation, believing in it, and then having patience, not trying to get rich overnight, understanding that it's going to take more than one cycle to make, a decent amount, and putting a $500 in isn't going to make you a millionaire. You need a DCA, dollar cost average, and, invest in different projects, use the products. I use Uniswap. I swap and trade on the Uniswap platform. So I bought a little Uniswap, not financial advice, but this is a disclaimer. I own Uniswap because I use the product. They get a lot of transactions, a lot of money through transactions, a lot of revenue. So the thing in crypto is if you use it, it'll give you more conviction, So go in and go down the rabbit hole. You don't have to keep your assets on Coinbase. Go off ramp, go use it. Go use some of the products out there. Everyone enjoying their coffee this morning?
So, I mean, to kind of wrap it all up,
yeah,
I think it's good to pivot at times. Like you can change your like I have, like for me, for so long it was basically Bitcoin only, and I was just, and like I said, I haven't sold any Bitcoin since 2018. I just continue to accumulate Bitcoin, and I have no plans to sell it really at all. But I've opened up my horizons to some altcoins, and I look at altcoins the same way as I look at a stock or real estate or sports cards, which I also invest in, or gold and silver, and things that I buy with the intention to accumulate more capital to eventually put into Bitcoin. So you can continue to gain more information, learn, and as you learn, you can make new judgments and new decisions and new paths along that way. But the main thing is, like, when you're deploying your capital in any sort of investment, don't think of you're going to try to beat the market or time the market, because you can't do it. Nobody can do it. Me and Troy can't do it. We study this nonstop all day long. We're messaging each other stuff all day long. We're writing newsletters all the time. Like, we have a lot of content, so we're heavy in this space, and we're heavy in the content, heavy in the information. But neither one of us will tell you that we know what's going to happen. We just try to make the best guess based on the information that we are digesting, and that's what we tell you to do. We're not going to tell you what's going to happen. We're going to tell you how we perceive the information that we are digesting, and then your job is to cycle through that and say, okay, what's the good stuff that I can use and what's the stuff that I don't need, and then make your investment decisions based on your information and research.
That was a very good point. And then that's the biggest thing. When I first got into this space, not crypto, just investing in general, stocks, 2016. I would go on Twitter. Someone would say a ticker symbol. I would buy that. I would literally buy it. Like, you know what I mean? Like everyone's on
Yeah.
Twitter
Yep.
shilling their own tokens.
Yep.
And that's because I couldn't think for myself, or I didn't want to take the blame that if the investment didn't work out, I can just easily go on Twitter and be like, oh, it's his fault. You know, as soon as I started thinking for myself is when I started getting profitable. When I started making my own judgments, when I started doing my own research and making my own investment decisions and taking the responsibility for myself is when I started to get profitable. You know, there's a bunch of different biases, you know, that you could, like confirmation bias is you say, let's say I want to buy Bitcoin or an altcoin, and I won't buy it unless I know someone else is going to give me that confirmation that it's a good buy. You know, you just got to think for yourself, have your own conviction, and you'll feel free. You know, you'll feel free. I used to be in this group chat, and I was like, I can't imagine not being in this group chat. Like, they're so helpful. Well, now that I can do the research myself, it's like I don't need the group chat. I'm still in the group chat, and I appreciate everyone in it, but you can't have that you can't rely on anyone in this space. You know, you can take people's thought processes and form your own decisions, but don't ever rely on any other people. Don't ever rely on a podcast. Don't ever rely on a newsletter. You know, build judgment, know how to navigate the fields of, you know, good information and bad information, and be able to differentiate between the two. And that's a skill itself, knowing how to distinguish negative or poor information and good information, and being able to make your own decisions. I think that's a skill.
Yeah, there is a slogan that we used to have in Bitcoin. I don't know if I see it as much as I used to before, where we would say "get off zero." Like that was our slogan to get people off, get some satoshis or start actually investing in Bitcoin.
Mm-hmm.
So like when you're at zero and you're getting off zero and you're first getting in the space, it's natural, like you just said, getting in that group chat. It's natural to rely on people that know what you don't know at first. So as you're dipping your toes in the water and starting to learn, you're going to probably rely more heavy on other people's information, but that's okay as long as you're absorbing and then getting to a place where you can make your own decisions. You're relying much less on that group chat, or much less on the people you're following on Twitter, or the things that you're looking at, and you use that, like I said, to pick little pieces that you need and know the difference between the things that you need and the things that you don't need to make the best sound decision for your situation.
Yeah.
Right.
Real quickly, my best investments were ones that I made my own decision on, like Shopify. I did really well on that. No one told me to buy Shopify. I did that through my own thinking. Velodrome, Ohm, different protocols, different opportunities I come up with. And some of my worst trades are actually from listening to other people. So, or holding on because they keep saying, no, it's going to do this, it's going to do that. No, I want to think for myself, right? We got 4 more minutes here, Don. So for the last 4 minutes, I want you to, just whatever value you can bring to the community and the viewers. You have this last 4 minutes to share your thoughts. I'll make a little short reel out of it, whatever. Just as much value as you can to bring to the viewers.
So this is a long game that we're playing here. Okay. It's hard sometimes to think about because we're in these 4-year cycles in this space. And this is like something we've never seen before in any other investment market. Stock market, they'll tell you, put your money in the stock market for 30 years. You'll get an average return of 7%. You're trying to get a $1 million portfolio in 45 years and blah, blah, blah. Like, it's like, so you're seeing how long that is, and you're putting money away, and it seems like it's never going to come. Where with Bitcoin and crypto, you can realistically, and people have made like life-changing money within a couple of years. So that is possible, but you need to really, what we just talked about for the last 15 or 20 minutes, you really need to have a game plan. Like, you can't just blindly throw money at Shiba Inu and Dogecoin and think you're going to get rich. And I hate to shit on those coins, but like CoinX, whatever new coin is going to come, because there's going to be, we can both agree, in 2024 and 2025, the next bull run, you're going to see brand new coins surface, and you're going to see people get very rich off those coins. What you're not going to see is some of those same people that you see get rich are also going to go broke. Okay, they don't tell you that part. All the people that made money on Dogecoin, I remember this. And I had friends that were like, oh, I'm up, like, I put $20 in, and now my $20 is worth, $5,000. And they were talking about how they made $5,000. And then, what ended up happening? They ended up cashing out like $300. Which, okay, when you look at it and you say, oh, I turned my 20 into 300, but it's like that 300 was 5,000 at one point. They didn't have a plan, right? So it doesn't matter how much your portfolio says if you don't have a plan with it, especially with some of the stuff that you've done no research on, right? If you get knocked on the head and you put $20 in some coin X and all of a sudden your $20 tomorrow is worth 20,000, like, what are you doing? Take profits, right? Like, you got to have and again, if you don't have a plan, then you get caught up in the greed. And again, I got caught up in my very first cycle. The very first time my portfolio said six figures, my heart said I should probably take some off the table here. But I'm like, but what if it goes up to 1 million? This is my shot to be a millionaire. Let's let it ride, right? And that was when it first hit 20,000. And then all of a sudden, a couple months later, it's like 10,000. And then it's like 7,000. And it's like, oh shit, where'd all my money go? Right. Mm-hmm. So, and yet you have to have a plan. It's so important, no matter what it is that you're doing, that when you start to take some money that you work hard for, right? Everybody works hard for their money, however it is that you're earning it. And you're going to make a decision to put it somewhere where you're hoping to make something with that money. If you don't have a plan, step back. Mm-hmm. Don't put it in anything until you do some research and then formulate what you're going to do. If I'm putting this money here, my plan is at this point, I'm going to do this. At this point, I'm going to do this. Don't just put it in something and see what happens.
And that doesn't
and I hear people say that. I've heard influencers say, I'm, well-respected, couple 100,000, even million subscribers. And they're like, hey, I'm going to put this money over here and see what happens. And that's the worst thing you can say to your audience, because you don't want that mindset. There is no see what happens. You need a plan.
And even if you have a plan, it doesn't guarantee you'll follow the plan, because again, we have emotions and we're fearful. When we're fearful when we should be greedy, and we're greedy when we should be fearful. So just because you have the systems in place doesn't necessarily mean you have the emotional intelligence to execute on that plan. And that's something you can't teach that. You can read all the books in the world. You can't teach discipline. You can't teach EQ. That's just something might have to lose money. It sucks, but you might lose money before you realize how to control your EQ. And that's what happened to me. My best learning lessons were from making stupid mistakes.